the strongest bull markets are always those that are multi-metal rallies, right? Not just one, not just the precious metals going for a run, but where you also have the base metals participating and potentially also the bulk commodities, whether it's coal, something like that, supporting the move up. And we are seeing that. I mean, metallurgical coal prices have strengthened dramatically in the last few months. So at this point, we're seeing zinc strengthen. We can have endless conversations about what will happen with zinc going forward, but the fundamentals are pretty strong.
It's been 115 years since investors had an opportunity like this. The Rockefellers, the Vanderbilts, and Henry Ford made a fortune from the last energy-powered vehicle revolution. Let's seize the moment in the hottest sector in the world right now. Visit crushthestreet.com/win.
Hello everyone and welcome into crushthestreet.com. I am Kenneth Amaduri and I'm joined today with the popular Gwen Preston of resourcemaven.ca. She's an expert in the mining sector and the economy, and she's been writing for years and researching, and just so much insight that she shares with people like us and her own members as well. And these insights are shared at her website for her members at resourcemaven.ca. But we are fortunate to be speaking with her today, and she's quickly becoming a favorite over here at Crush the Street. Oh, and by the way, she's putting on and co-hosting the Metals Investor Forum, which will be a conference in Vancouver on November 12th and 13th. We'll have the link in the description area, and you'll be able to attend that for some deeper insights and a real personal experience in the mining space with some of these companies if you'd like to attend. So without any further ado, Gwen Preston, thanks for joining me.
Thank you so much for having me.
Well, I got to start off with this. With all the hype of October, the Chinese yuan inclusion in the SDR basket, a stock market fall crash, I wasn't expecting gold and, more specifically the mining sector to pull back the way it did here going into the fall. So let's just get your thoughts here on what we're seeing right now.
Absolutely. I mean, it's been after the bear market that we had this month, and the pullback that we've seen has been enough to create a bit of anxiety, right, amongst the executives in the industry and investors in the industry who are still, because of that bear market experience, easily perturbed, shall we say. But from a big picture perspective, this is normal, right? We had gold. It's easy to look at a short-term chart and see how much gold has come off in the last month or couple weeks here. But if you even just look at sort of a one-year chart, remember, gold is still up substantially this year. It was up as much as 24-25% for a bit there. So for it to have come down some, it's still at the sort of 16% up year-to-date mark. It's a bit of a correction, a bit of a consolidation. It makes sense. It's healthy. It's part of how corrections work. And actually, in my letter last night, I looked a little bit at how corrections that follow a steep gain, which is sort of the situation that we're in right now, how those often look. And it's usually not a, down and then right back up again picture. Instead, it usually has more of a W shape. So we go down and then we oscillate a little bit along the bottom, and then we're situated to gain again. And we saw that in sort of 2001 and 2002 and 2006. These were all corrections that happened after a steep gain. We usually have a little bit of an oscillation. It lasts something like 5 months, and then we're ready to go again. And what's interesting right now is that time frame lines up pretty well with a bunch of other macro events that are significant. The U.S. election being one, and the December Federal Reserve meeting where it looks like we're going to get a rate hike, that being the other. So I'm kind of expecting this correction to continue through the fall. We've got to get through what I think is probably going to be a rate hike, unless there's data that comes out over the next few months that really throws that off. And then best case scenario, and what's looking somewhat likely to me right now, is that then we're set up for 2017 to start the way 2016 did, which was fantastic.
Yeah, interesting point there. And I use the word correction all the time too, but I find it funny. It almost implies that the downward move is the direction it's supposed to go, the correct way. And I always use that. But anyways, one of the things I've heard Rick Rule point out prior to the onset of the start of the bull market was that gold would actually lead the way and other commodities would follow. And we actually saw that, with silver, and we're also seeing that with some of the other commodities like aluminum, lead, and zinc. And in your opinion, does this add confirmation that we are in fact in a bull market despite the correction?
Yes. In short, yes. It's interesting. The strongest bull markets are always those that are multi-metal rallies, right? Not just one, not just the precious metals going for a run, but where you also have the base metals participating and potentially also the bulk commodities, whether it's coal, something like that, supporting the move up. And we are seeing that. I mean, metallurgical coal prices have strengthened dramatically in the last few months. A lot of people are paying attention to that because coal was in such a terrible situation for quite a few years that we all sort of turned off from coal, and fair enough. But yes, at this point, we're seeing zinc strengthen. We can have endless conversations about what will happen with zinc going forward, but the fundamentals are pretty strong, whether it continues to strengthen dramatically in the short term or whether we're looking at more of a medium-term run. Copper, demand for copper grows with population, right? And so when copper comes off, it's really always just a matter of time before it comes back up again. Is that going to line up exactly with gold's run? No, gold went first, like you said. But yes, I do think that we're looking at a situation here where gold is going to continue to move because of the big picture negative or zero interest rate environment, or perhaps an inflationary environment if that continues to develop. Gold is set up to do well, and we're now looking at other base metals joining in on that move, and that will only strengthen the mining picture.
We talked about how gold has moved up 25% this year, and the stocks, underlying mining stocks, some of them have moved up hundreds of percent. And sure enough, we're seeing that pullback. And I actually got to give credit to George Soros dumping his Barrick Gold shares near the top, or pretty much right at the top, and getting out. And I'm not sure if he's planning to re-enter the market, but he made quite the call there if he does plan on buying this bottom here. But I guess I just wanted to get your thoughts on the opportunity for people in the mining sector to enter at these prices here, as we are presented with lower valuations, or cheaper valuations, I should say.
Absolutely. So, in the gold move that we saw on the equity side this year, we had two different, broadly speaking, I think we had two different groups moving into the gold space. We had the sort of classic long-term perspective value hunters. I would put myself more in that category. Those, investors who are aware of the sort of big picture opportunity here and are willing to hold on for a longer period of time, years perhaps perspective, to get some big moves because they're looking at the big picture perspective. But then we also had the specs move in, right? And that includes people like George Soros, some of these hedge funds that needed something that would perform well for them this year, and they moved in because they saw gold starting to go, and a lot of them moved back out again, and that's part of the reason that gold came back down. And that's okay, because those guys move in and out. Again, I don't know either whether George Soros is going to move back in. His call, you said it, his call was very prescient. But I see the current move down absolutely as an opportunity. So really what I'm spending my time doing right now is looking at a lot of stocks that I thought I missed, right? They moved too quickly and I didn't get in on them in, call it February, March, April, whatever the time frame was that I was looking at them. They got away from me. well, now they're back down again, and it's giving me an opportunity to get in. A lot of these stories still offer some very significant, like, deep value, if you're of the perspective that we're still within a bull market, which is what I believe. So yeah, I think there is a huge amount of opportunity right now for investors to either increase positions in stocks that they like, or add new positions to stocks that they thought got away from them when the sector went a little crazy in the first half of the year.
Gwen, I want to spotlight uranium once again, and you're an absolute expert on this commodity as well as the other ones as well, but I really want people to understand the opportunity that is presenting itself with the uranium spot price being as low as it is. I think it's even lower than the last time we spoke, and I just think it's so interesting what is going on with it, but we can look at history to point to the fact that this is the time to be looking at depressed companies and the opportunity that exists in this sector here to ride out the upside potential. So if you would, let's give us a little class here on uranium once again for why you think it's worth our time.
Absolutely. So I believe in uranium. Perhaps I started believing in uranium a little early. I know one of Rick Rule's famous quotes is that, moving in too early ends up being wrong, right? If you're too early, as opposed to just being ahead. It was a year ago that I really started hammering the table on uranium. And yeah, unfortunately, the price has not done anything much. We had a little lift this year, and it's come back down below where it was. But the fundamentals for this commodity are undeniable. We're looking at a situation where by the time we get to 2019, there is not enough supply to feed all of the reactors that are operating right now and under construction. It's difficult a little bit for people to see that 2019-2020 situation clearly, because we are drowning a little bit right now in an excess of spot supply, and that's because of Fukushima. That's because the Japanese aren't using uranium the way that they were, because most of their reactors are still turned off, and so the uranium spot market is flooded with supply, and that's changed the sort of dynamic of how the industry works. Usually utilities do not mess around at all with the possibility of running out of uranium, so they make sure that their needs 3 years down the road at a very minimum are totally covered. Right now, there is so much spot supply that they're getting a little complacent, and they're letting themselves be uncovered for some of those needs 3 years down the road. That will tip, right? That situation will change. I think it will happen quite suddenly. I think at some point, a few utilities will say, okay, now that supply crunch is close enough that we really have to sign some contracts and make sure that we're covered, because we don't want to be the ones that are caught out when that crunch hits. That will happen, and sort of, I think quite quickly, prices will start to rise, because all of a sudden the reality will become present instead of future. Right now, unfortunately, we're not quite at that point. Instead, what's dominant is this spot oversupply that we have right now. But at the end of the day, there's just a lot of reactors being built all around the world, and they need uranium, and uranium prices have been insufficient to support new project development for a long time. You can take the 2007 spike out, and really we just haven't had strong enough uranium prices to support new mine development. And so we're really looking at a situation where there isn't enough uranium to go around. So it's interesting. It's kind of like gold a few years ago, right? Like, it was, nobody liked it. It seemed like there was so much being produced, and the economics didn't seem to make sense for new operations. But that changes, and we know that it changes, and that's coming. I certainly know. Even just yesterday, I was talking to a group of guys who have been very successful in uranium in the past, and they're looking at starting up a new uranium company because this is the opportunity that they see. So it will happen. You just need to make sure that you have an appropriate expectation around time frame. It's not going to happen tomorrow. I don't know exactly what it's going to happen, but It's within the sort of number of years time frame.
So why do you suspect that the market isn't efficiently pricing uranium for the future macro fundamentals? Is it that most people just don't understand it, and the market doesn't understand what's going on with uranium to anticipate, the shortage?
The thing with uranium is that it's not the market. There's no real way to speculate on uranium, right? Because it's a contract market. There's no London Metal Exchange price that you can speculate on uranium. If there were, perhaps we would be seeing prices move up already, because there's enough investors like you and me and a bunch of the people I'm sure who are listening to us right now who are aware of uranium's pending supply crunch. But there isn't that speculative aspect in the uranium market. The only way you can speculate on uranium is through stocks. The prices are determined only on a contracting basis, and so on a purchasing basis. It's actually what people are paying to buy uranium today and in the future. So because it's a different market like that, you just don't get that speculation built in. So you really have to wait for the utilities, the actual users of uranium, to say, okay, we're going to start paying more because we realize that this is happening. And it's really just a standoff right now. They're just seeing how long they can wait before they start paying more for the commodity.
Well, and that really goes to show why it's possible for uranium to spike so fast, because once these contracts are up, I mean, there's going to be a moment where the repricing happens, and it's unlike these other commodities which are traded. And that was a really good point you made there. So Gwen, in conclusion here, I just want to get your, parting words of advice for the audience, and also please share with us what the audience can get if they visit you at resourcemaven.ca.
Absolutely. So, I mean, in general, I think interested resource investors have a really good opportunity right now to take a look around and see what they missed, position in some stocks. I think 2017 is going to be a pretty interesting and exciting year for the mining space. If you want some guidance in perhaps how to do that, that's certainly what my service offers. I write a weekly newsletter that talks about what I'm buying and selling in the mining space. And explains what I think about the macro picture and the equity side of things, what I like and why I like it. Also, I'll just throw out there that if you are in the Vancouver area and you happen to be around November 12th and 13th, where I'm co-hosting a conference that I think offers a lot of value for people who are looking for stocks that might offer good opportunity going forward here. It's called the Metals Investor Forum, and I put it on alongside Eric Coffin and some other newsletter writers. Brent Cook's usually there, Jay Taylor will be there, John Kaiser will be there. So if anybody's interested, it's a really great conference, some good time to chat with people like myself and a bunch of executives from the companies that us newsletter writers think offer the best opportunity going forward. So you can find out more about that, or find out more about my letter and sign up for a free trial at resourcemaven.ca.
Awesome. Well, Gwen, thanks again for coming on the show and sharing your insight with us. I look forward to speaking with you in the near future here.
Thanks so much for having me, and I look forward to it as well.